I have learned over the years that if you want exponential growth in a company, you need to find a small company that is tethered to a larger company that has tremendous growth potential, and it will pull it along. And many times it will pull it along at a much more rapid speed because Wall Street's not really paying attention to it like it is the big tech company. There are examples of that with Apple and Microsoft and Amazon and many others. Well, I think AEHR is one of those. Let me show you this chart and I'll show you exactly what I mean. The red and green line is that of AEHR. AEHR makes this machine that basically tests semiconductors to see if they're working. It doesn't work. It doesn't matter a whole lot if it's in a toaster, but it matters if it's in an autonomous automobile. You might understand that. So what AEHR does is they are the leader in this field. They test about 8 wafers in their machine at a time, whereas their competition does 1 wafer at a time. So in the foundry, they take up less space. This is very important to one particular company, and that is Tesla. Tesla is the orange line. Now, what AEHR does is they actually sell their machine to ON Semiconductor. That's the blue line. So when ON Semiconductor then sells that semiconductor and the machine to Tesla, you can see that AEHR stock goes up substantially, and it mirrors Tesla's stock. So if you believe in electric vehicles, and you believe that over the next 3 years, electric vehicles are going to come back to the importance that they were back here in 2023 and back here in 2021, then you can understand that AEHR is going to benefit dramatically. They are a microcap company. They're not even $1 billion company. They're small. So if you don't want to spend $100 on Tesla stock, but you're okay spending $11, this might be an alternative for you. I think, as the history shows, and we'll go over that again, this is a stock that can give me some substantial returns if the electric vehicle business comes back. So AEHR, to review, basically makes a wafer testing machine. That is, that wafer that looks like the size of a 78 album goes into a machine, and there are 1 million transistors on this wafer, and we want to make sure that they are all working, particularly if they're going to go into an autonomous automobile like Tesla. So they have to test them to make sure that they're working. Well, AEHR makes a machine that will test about 8 wafers at a time. All their competition makes a machine that tests 1 at a time. So you can see the efficiency there. You can also see that it takes up 1/8 of the space that the 8 machines from the competition makes. So they've grown very well as Tesla was growing well. But as Tesla's sales pulled back, so went AEHR. But we look back, and like I showed you in earlier, they have a 5-year track record of an average rate of return of 168%, 10-year 85%, 20-year 52%. But they're down 57% this year. And again, that is because the EV market is down. So if I believe that the EV market is going to come back, if I believe that I someday will replace one of the cars or both of the cars in my garage with an EV, I believe AEHR is going to come back. If I believe that Tesla's taxi program, where one of my cars can become a money-making source for me, that cars will be activated out of garages and put to service, and Tesla will pay me, share with me the revenues that they generate. If I believe that, then AEHR is a good investment. Now, I also recognize that Wall Street recognizes or believes that AEHR will come back because they're projecting their revenue growth over the next 2.5 years is 238%, and their earnings per share growth is going to be 500%. So if I can use those numbers to project, well, if that kind of growth is going to happen, 500% growth in their earnings, then what will their stock price be? So then I ask myself, are they a sound company? Well, they have no debt. Are they making money? No, not right now. But again, Wall Street projects as that they are. They have no long-term debt. Go look at their financials, and they have no short-term debt. So with that, my projection, based on Wall Street's projection, is that the stock price on 12/31/27 will be $52.73. Now, is that unheard of? Well, actually, in August of 2023, it was $52.98. Is that a coincidence? Maybe it is, but it's based on Wall Street's projection of what AEHR's earnings and revenues are going to be in the future. When will this happen? I don't know. Do I believe that all of a sudden next week people are going to go out and start buying more Teslas? No, I do not think that. I think that it's going to be dependent on probably interest rates, because as Elon has said repeatedly, I'm not selling as many automobiles because most automobiles are financed and the cost of financing has gone up. We see that in real estate. We see that in EVs, and we're seeing it in commercial loans as well. So it's all tied together. Is this a next week big winner? No, it is not. And recognize that. I don't put more than 5% of my portfolio in any one stock, but I'm confident that my $11.51 investment in AEHR will sometime, probably within the next 2.5 years, go to $52.98. Again, do your due diligence. If you're looking for a moonshot, I think this is a good one. And if you'll come to my website, you'll find I've got about 5 others. Totally 6, 7 stocks that I think are depressed. They're depressed. They're good companies. They don't have much debt. But because of interest rates, because of inflation, and because of a movement away from electric vehicles, there's only one semiconductor company right now who's really hitting the ball hard, and that's NVIDIA. The rest of them are depressed. If I believe that semiconductors are part of my future, and they're part of the world's future, and they're an integral part of every part of our economy, then I'm ready to take some moonshots. I'm Kerry Grinkmeyer. I'm a retired financial advisor. I'm here to make your life better. I'm here to share my knowledge. The other thing that I've recognized is 98% of the world is negative. They look at things, improvements, technology, and they say that's a bad thing. No. Look, our world has gotten better over the last 2,000 years, every year. Now, we've had some hurdles we've had to go over, but all in all, we live better than we did 100 years ago. And we will live much better than we are 100 years from now, and 5 years from now, and 3 years from now. So invest in your future, and your future will pay you big dividends. Talk to you again tomorrow.